Today's initial weakness in the markets made the 200-day moving average still a very likely target. However, closing as a hammer signal right at the T-line and almost in a doji condition, meaning indecisive, makes for an easy trade execution tomorrow for establishing trades. If it opens positive, they're taking it up, probably a J-hook pattern. If they open it negative, they're still taking it down to the 200-day moving average. That seems very nebulous, but right now the market's nebulous. But we have the advantage of knowing which way they're going to take this market based upon how they react after a hammer signal. The NASDAQ was less compelling. Even though it closed near the top end of the trading range, it was still significantly lower. Still keeps us in this type of price movement. 200-day moving average is still a viable alternative. However, how they open this market tomorrow will be very important. One of the simple rules for taking profits in candlestick analysis is when you start seeing gap ups in the overbought condition, start looking for a sell signal. Notice that the little fry pan bottom started this strong uptrend. However, when they started gapping up in the overbought area, a very simple rule is you put a sell stop one tick below the open of the previous day. If it comes back down through that level, that tells you the bears have started to take control. They're probably going to come back down to at least the T-line, but it also says there's now a change of investor sentiment from this strong uptrend. That same technique could be applied to our recommendation on PCYC, where it came back down through the previous day's low, but came back up. At least you're out of the position. You can always make adjustments from this point, because right now you're starting to see a change of investor sentiment with a hanging man signal with stochastics in the overbought condition. And keep in mind, the candlestick signals show the patterns much more graphically than other trading methods. For example, we had a gap up through the T-line after a bearish engulfing signal in the dollar. Wave 1 until we had a left-right combination, a doji followed by a bearish engulfing signal in the overbought area. Came back almost to the 50-day moving average, and then we had a morning star signal. We're still now in an uptrend in the dollar as long as it stays above the T-line. Also note that we have a wave 1, wave 2, wave 3. We can pretty much project that if this is wave 1, wave 3 should be of the same magnitude. That'll be it. We'll see you in the chat rooms.